Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MSA Safety Inc. quarterly report. MSA Safety Incorporated provides a wide range of safety products and technology solutions to protect people and facilities worldwide. The company's offerings include breathing apparatus products, firefighter helmets, and protective apparel, fixed gas and flame detection systems, handheld portable gas detection instruments, industrial head protection products, fall protection equipment, including confined space equipment, and harnesses, air purifying respirators, eye and face protection, products, ballistic helmets, gas masks. These products cater to various industries such as fire service, energy, construction, industrial manufacturing, and HVAC/R. The company operates through both direct and indirect sales channels, serving customers through distributors and end users. The stock price of MSA Safety Inc. has made no significant changes above 2.82% in the past year, despite several news events influencing its performance. The company's financial performance and earnings have been strong, with third-quarter results exceeding Wall Street expectations and second-quarter results surpassing revenue and profit forecasts. However, declining profit margins due to inflation, tariffs, and unfavorable foreign exchange rates have raised investor concerns. Additionally, the fire service business has faced challenges due to delayed U.S. government funding and changes in fire standards. Despite these headwinds, MSA Safety's strategic developments, such as the acquisition of M&C Tech Group and new product launches, have contributed to sales growth and strengthened its position in the market. However, the decline in stock price can be attributed to a combination of factors, including declining profit margins, investor concerns over the fire service segment, and a 5.1% fall in shares after the third-quarter results announcement. Despite strong financial performance and strategic developments, MSA Safety's stock price has declined by approximately 4.24% over the last 12 months. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. The company's revenue has grown due to an increase in net sales, expansion into new markets through the MSA Plus solution and acquisition of M&C Tech Group. The detection segment saw a significant 17% increase in revenue, while the industrial PPE and other segment experienced an 18% growth. Revenue decline drivers. On the other hand, the fire service segment witnessed a decline of 1% in the 3 months ended September 30, 2025 compared to 2024. This was largely due to the effects of changes in U.S. trade policy and trade agreements, along with increased tariffs. Geographic drivers. The Americas segment saw significant growth, with net sales increasing by 53% in the 3 months ended September 30, 2025. In contrast, the international segment experienced a decline of 16.7% due to double-digit growth in industrial PPE being offset by other factors. Overall, the company's revenue growth can be attributed to strategic expansion and innovation, while revenue decline is largely driven by external factors such as trade policies and tariffs. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between Q3 2024 and Q3 2025. Net income increased by $2.965 million, 4.5%, from $66.648 million to $69.613 million, indicating a positive trend. However, on a year-to-date basis, net income decreased by $5,030,000, 2.5%, suggesting a decline in overall performance. Profit margins have also experienced fluctuations. The gross margin decreased from 47.9% in Q3 2024 to 46.5% in Q3 2025 due to inflation, tariffs, and foreign currency challenges. Adjusted operating income margins saw a decrease of 2.4 percentage points in the Americas, while international margins increased by 0.5 percentage points. The effective tax rate also rose by 0.3%, from 24.4% to 24.7%. These changes indicate that the company is facing challenges in maintaining its profit margins and net income growth, despite some positive trends. The company's financial performance indicates a strong ability to generate cash from its core operations. With an operating cash inflow of $241.5 million over the first 9 months of 2025, it is clear that the business is producing positive operating cash flow. This trend suggests that the company's revenue and expenses are well managed, allowing for sufficient cash generation to support ongoing activities. The company's debt level and interest expenses have undergone significant changes. While the notes payable and current portion of long-term debt decreased by $18,182,000, the long-term debt increased by $138,752,000. This increase in long-term debt is likely to result in higher interest expenses. However, despite this, the company's interest expense has actually decreased by 21% from 2024 to 2025, primarily due to lower interest rates. Management's outlook on company strategy. The company's management is optimistic about its outlook, citing several factors that will drive growth. They expect to achieve synergies from combining operations with M&C and anticipate continued momentum in key areas such as fall protection and detection. The company also expects to maintain low single-digit full-year organic sales growth. In terms of strategy, the company is committed to evaluating acquisition opportunities to continue growing in key end markets and geographies. This suggests that management plans to expand the business through strategic acquisitions. Additionally, the company's healthy balance sheet and access to capital will enable it to navigate a dynamic operating environment. Overall, management's outlook is positive, driven by decreased interest expense, increased pension income, and a strong financial position. Acquisitions and divestitures overview. The company has made significant transactions in the form of acquisitions and divestitures. On May 6, 2025, it acquired M&C Tech Group and its affiliated companies for approximately $189 million. Additionally, on January 5, 2023, the company transferred ownership of MSA LLC to a purchaser through the purchase agreement. On the other hand, the company has also divested certain assets. Specifically, MSA LLC was divested on January 5, 2023, marking a significant transaction for the company. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. Notably, it paid out significant amounts in dividends, totaling $61.6 million in 2025 and $58.7 million in 2024. Additionally, the company repurchased shares worth $50 million in 2025. These actions demonstrate a commitment to rewarding shareholders through both cash distributions and capital reduction. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup. A significant increase in finished products inventory by 22% from December 31, 2024 to September 30, 2025 indicates a potential issue with supply chain management. Furthermore, the decrease in inventory related to working capital cash usage suggests that the company may be struggling to manage its cash flow effectively, exacerbating the problem of inventory buildup. These factors raise concerns about the potential for supply chain disruption and the need for the company to reassess its inventory management strategies. That concludes the financial summary for MSA Safety Inc. Feel free to comment below, and I will be happy to answer them when possible.